Market update now. Tom Piotrowski, a very good morning to you over at CommSec. How are we shaping up today?
Pete, we're going to run into the teeth of some brisk selling this morning. The futures are telling us yes. Well, you might inhale because we're going to be down by around 1.2%. So
okay.
That is a decent knock. There are a couple of factors behind it. We saw a pretty solid retreat for US stocks overnight. So there are a couple of aspects to this, but if you wanted to be lazy, you could just say that over the course of the month so far, these indices have run quite hard. In the case of the NASDAQ, for example, it's been up in the order of about 6%. So quite a bit of profit taking in that context over the course of the last couple of days. Overnight, down by around 0.75%. Similar outcome for the S&P 500. The Dow Jones was down by 1.3%. You have got the political landscape starting to bleed into the conversation as far as markets are concerned at the moment. Pete, we're in the midst of the US company reporting season. Mixed fortunes on that outcome last night. In fact, just now, after the markets closed, we've seen Netflix report earnings. Better than expected numbers generally, but the shares are a little bit weaker in after-hours trade. Again, for context, that stock's up by about 40% in year-to-date terms. So what that means for the local market, we have seen the US dollar firm up overnight. That's put downward pressure on commodity prices. And the other important catalyst when it comes to commodity prices is that this week the Chinese authorities have been convening the third plenum. This is an important meeting in the Chinese context because it's the forum in which they discuss growth initiatives, and from the market's perspective, it's been lacking in terms of announcements that the markets can key off in terms of the outlook for the Chinese economy and resource demand in particular. That's part of the reason why you've seen a bit of a downdraft for mining stocks in the last couple of days.
Alrighty, Tom Piotrowski, thank you.